Now, what happens if we were to go out and get access to even just one of these debt weapon accounts that I've been demonstrating are completely liquid and available to me at any given time? All right, guys, welcome back to the VIP Financial Ed channel. Thank you so much for tuning in. Released a very cool video yesterday and then one the day before talking about how we are accessing liquid capital in order to create wealth. Now, obviously in the comments section, we'll get people responding to these concepts. Some people express confusion or want additional information regarding how these types of accounts can be used. So what I want to do today is just very quickly illustrate for you a couple very simple examples of why this is so important for us, not just to eliminate your debts on a more accelerated basis, preventing massive amounts of interest over time, but also then to be able to take these accounts, pay off your mortgages, and go out and acquire new assets at a much faster rate. So we're going to go ahead and take a quick look on this dry erase board. As you can see here, this is just kind of a typical illustration of what we might see as a borrower on any given day, where we have, let's say, a $200,000 mortgage balance, along with $10,000 worth of current credit cards. An $8,000 automobile loan is not uncommon. And let's say that this individual has been taught to go ahead and save capital. Now, that's something that we've learned all the way growing up. This is, something that we're taught to believe is the right decision, and it protects us, and you need that rainy day fund, that emergency savings. Now, think about this for a minute. $10,000 sitting in a checking or savings account is doing very little, if anything at all, to earn you more money. This money is sitting here as a just-in-case account. What I've learned is over the last 15 years of working with families, very few ever need this $10,000. That just in case experience just never comes. So this $10,000 sits around year after year after year not being used. Now, what happens if we were to go out and get access to even just one of these debt weapon accounts that I've been demonstrating are completely liquid and available to me at any given time? So let's say we have this $20,000 here, okay? $20,000 and a bug are available for use. What happens, and I would never encourage you to go out and get access to this cash. The cash is completely unnecessary. We do that just for purposes of the example here, okay? So we take this money, it's in a checking or a savings account, we've transferred it from one account to another. Now, arguably speaking, that $20,000 is twice as much as what's in savings now. So the savings becomes unnecessary, right? If I have access to this and I can transfer it into my savings account whenever I need it, then this money sitting in savings can actually be put to work. So what happens if we were to take this money and actually pay off the credit card account? Now, by doing so, the FICO credit scores skyrocket because the credit card balances have been completely eliminated, and that is one of the single greatest impacts to your credit profile, is eliminating your revolving credit card balances. Now, we have not borrowed from the $20,000 that we have available to us. This money is still sitting with a $0 balance. So it's here if we need it, but it's not showing up on our credit because we haven't drawn against it. And yes, we don't have the savings sitting idly unemployed in a checking or a savings account any longer, but we're no longer paying interest costs on the credit cards. Now, most credit card users rely on low to 0% credit card promotional interest rates to begin with, and after 12, 15, 18, sometimes even 24 months, those interest rates will then skyrocket, and you'll end up paying very, very high interest rates to the tune of 13% all the way up to sometimes even above 30. So the interest costs on this $10,000, along with the minimum payment every month, have now been eliminated, and that $10,000 in savings is working for you day in and day out, even when you're asleep. Very, very easy solution for somebody, and arguably speaking, because the amount available in emergency reserves has grown by 2, you're twice as safe as you arguably were without following this approach. Guys, thank you so much for checking out this quick video. We'll continue to release some very basic examples of how these debt weapons can be used to your benefit. In fact, check out the video coming up in the next couple of days that will discuss for you exactly what impact it would have by taking these debt weapon dollar amounts and applying lump sum payments, whereby we then start to park our income in a completely different way than we normally have been taught, and we can rapidly drive away the principal balance on your home loans and save you hundreds of thousands of dollars over time. We look forward to seeing you on those videos. Until then, make it a great day today, and don't forget to subscribe. Take care.